All right, welcome everyone. Welcome to our most recent, our latest webinar of our series. Today we're going to be talking about what everyone is talking about right now, and that is cryptocurrencies. I think most people don't actually know what they are, but they want to invest in these things. So before we start, I do want to make sure that everyone does know that this is not an investment recommendation. This is a purely educational event. So without further ado, we've got Elliot Johnson, CIO and COO of Evolve ETFs. So I'm going to pass it over to Elliot and he can introduce himself.
Yeah, thanks, Sheean. Pleasure to meet everybody and appreciate you inviting me onto your panel today. I am one of the founders of Evolve ETFs. We are an ETF company located in Toronto. We have 20 ETFs on the Toronto Stock Exchange, and we have over $1.8 billion in assets today. And two of our more recent ETFs, I think, are the topic of today's webinar, that being EBIT, which is our Bitcoin ETF, and Ether, ticker is ETHR, which is our Ethereum ETF. But we're known for disruptive tech investing. We've been a leader in disruptive tech innovation for the past 4 years since we put our business together. We have products that address themes such as cybersecurity, automotive innovation, cloud computing, video game investing, and so forth. So if anybody's interested in any of those ideas, please visit our website at evolveetfs.com, where you can reach out to us. We can certainly have a conversation with anybody if there's any information they'd like on those products as well. But again, really happy to be here joining you today. Thank you very much for having me, and excited to talk about crypto because I think it is the topic of the day, certainly, if not the topic of the year these days. So it's a lot of fun to be in this space and great to be talking about it. Thanks again.
Excellent. Elliot, thank you so much. I actually received a couple emails just there. People are trying to log in and I don't know what's happening, but we're just going to continue to go through this process here, and then I can send the link off to them after. So I think let's try to stay away from products and let's just try to stay and talk about the general cryptocurrency. So why don't we get into our first question here? That is, what are cryptocurrencies? And there are many variations to these things, and how do they work on a very layman term basis, if you will?
Yeah, sure. You know, I think it's a really great question to start out with because maybe there's an assumption that people have that cryptocurrencies are something that everybody knows about and uses. And I think the first thing to put out there is that there are lots of different cryptocurrencies. But simply put, as simple as I can, and I'm not a programmer, but I think I understand some of the technical details, cryptocurrencies are essentially currencies that live on the internet. They are currencies which are created by programs, cryptographic programs, that secure the issuance and ownership of that currency online. So maybe to use an analogy of the Canadian dollar. So the Canadian dollar is issued by the Bank of Canada and sold through banks to Canadians who need currency to go out and then buy and sell things at the store with merchants. That's how that works. For a cryptocurrency, it's a program that is run by a network of computers. So lots of individual computers that are not have no particular relationship with each other, just people who are participating in that network. And the network itself creates more of those currencies and allows people to buy and sell the currencies from each other. That's what a cryptocurrency is, but the crypto industry is now building things on top of those cryptocurrencies, because in some cases, and it's particularly true for Ethereum, which I think hopefully a lot of people have heard about, that currency has the ability to build applications on top of it. And what you're seeing now are programs that can do things online that you used to have to do at a bank. So to take, for example, exchanging currencies together, or entering into futures contracts with each other, or speculating in the price of a stock. Those are the kinds of financial activities that you used to have to go to a bank to do. And now you're starting to be able to do them online using these programs that are run on top of cryptocurrencies. So it's all very technical. It's a lot like the internet back in the early 1990s when, you know, web pages first were starting out. And if everything happens that the folks who are doing this work hope to happen, we'll see our financial industry really become implemented online in an even more meaningful way than it is today. And that's the exciting part.
That's really interesting. It's so it sounds like, there's computer programs, it's backed on this code of some kind, and that's created this currency that people are exchanging. It's really, really cool. I mean, it's still a lot way out of my realm, but that's why we're here today. So did you mention blockchain and like how that kind of like goes into the cryptocurrency portion?
Yeah, so let's get to that level of technical detail. So the programs that create cryptocurrencies are called blockchain programs. And so the way that this works is a blockchain is like a ledger. So at your bank, when you open an account at your bank and you deposit money, you would open your account and it would say, Elliot's account, and then I might put in $1,000. And then as I withdraw money from that, they'll say minus $100 if I take $100 out. And then if I deposit another 1,000, it'll say plus 1,000. So then I might have $1,900. And so it adds up that total and it shows I'm withdrawn it, or maybe it shows that I've transferred money to somebody. When you go on your online website for your bank, you see I've transferred money, or I sent money to my son, or I paid a tax bill, or I did whatever. And you see all those ledgers there. That's a ledger held by your bank. The blockchain is a ledger that's held across the internet for all the people who are participating in a cryptocurrency. And it shows all of the movement of that currency. So let's take Bitcoin on the blockchain between people. So if I send you, Sheean, a Bitcoin, I will show on the blockchain, the Bitcoin blockchain, it will show from my address to your address, 1 Bitcoin has moved. And the blockchain can never be changed. It is always accurate to the most recent transaction because each transaction connects to the last one using cryptography. So you can't just go into the ledger and change my account's holding of, if I have 10 Bitcoin, you can't just go in and then cross those out and then add plus 10 to yours, minus 10 to mine. That doesn't work that way. I have to send them to you and you have to receive them in your address on the blockchain. And this is how you end up with being sure that value is transferred safely and accurately between people because it's a permanent record. And so this is the revolution that took place when Bitcoin was invented. Bitcoin was invented by a person who goes by the name of Satoshi Nakamoto. We don't know who that person actually is. They're sort of an anonymous person. But in the white paper that person wrote at the beginning of Bitcoin 12 years ago, they said, it was in the shadow of the great financial crisis, the global financial crisis, where banks were printing money like crazy. And this person said, this is strange to me. I hold dollars and then the Federal Reserve just goes and makes more dollars. Now my dollars aren't worth as much as they used to be. And in fact, you saw that last year with the crisis and the pandemic, about 25% more US dollars were created just out of thin air. So if you hold US dollars as an American citizen, you sit there and go, well, now the dollar that I held last January was worth 75 cents in kind of equivalent purchasing power in December because somebody that I don't know made more of them. That to me seems like not a good way for me to store value. So Bitcoin, the idea behind that, just to pick on that blockchain as the most famous one, is that it will only ever have 21 million Bitcoin. So there's a limited supply. They can be divided into 1 million small parts. So there's more than enough to go around. But if you own a Bitcoin or a part of a Bitcoin, you're not going to find yourself at the end of the year only half of the amount you thought you had because somebody you don't know made more of it. And that's really the concept behind the blockchain and why people are gravitating towards something like Bitcoin and thinking of it as digital gold, because it's this scarcity that is guaranteed by the program called the Bitcoin blockchain. You're not going to have suddenly another 100 million Bitcoin show up because, somebody in the White House or somebody in Ottawa or some government somewhere decides they want there to be more Bitcoin. It doesn't work that way. And that gives people the ability to know if I own it, I have one of the things and nobody else can have it. This is revolutionizing how people think about value because, and again, back to the analogy of gold, people give gold value because it's so hard to get, so hard to mine it out of the ground. There's not very much. I think all gold ever mined in the history of the world would fill something like 4 Olympic swimming pools. It's a very small amount of gold, actually.
Oh, wow.
That we've pulled out of the ground. That's why gold has value. It's had value for thousands of years. Now, with the internet age, people are using something like Bitcoin because it's not that convenient to use gold. If I have gold and I want to send you gold, I got to get an armored car. It's kind of annoying, but I could send you a Bitcoin with my phone in a microsecond, and that would transfer that value from me to you. And that's true for people around the world. And so you're seeing it being adopted globally as a store of value and a way to send value around. So that's all wrapped up in this cryptographic program called the blockchain. And I think once investors kind of realize that the blockchain and Bitcoin is just like gold and gold mines, it kind of starts to make sense, because I don't know the technical details of mining for gold. There must be an enormous amount of things you need to know in terms of how to drill the holes and take it out and crush it up and melt it down. I don't need to know any of that to know that gold is of value. Just like I don't really need to know all the technical details of the Bitcoin blockchain. I just need to know there's only so many Bitcoins. There's only ever going to be 21 million Bitcoins. And if I have one, that value is going to be retained because of the limited supply. I think that's something that Bitcoin has been able to be adopted in response to investors kind of getting to that point of understanding recently.
Yeah, I think it's really interesting what you said. I think the blockchain. So does that mean that everyone on this ledger can see everyone's transactions? Is it transparent for that blockchain ledger? So now it's not private because we know there's 21 million Bitcoins and every transaction is apparent, but it's probably not your name. It's probably like some number or whatever that identifies you, correct?
Yeah, that's exactly right. And in fact, there's a lot of misinformation around Bitcoin. People say, oh, criminals are going to use it to do crime and transact on criminal things. It's arguably the worst currency to use if you're trying to hide what you're doing, because everybody can see everything that happens on the ledger. Now, nobody knows it's you because you just are using your cryptographic code. But if the police wanted to come after you and they go to CoinSquare or Coinbase or one of these places where you're translating Canadian dollars into Bitcoin, those places will say, well, here's Elliot's address. And then they'll know, okay, well, that address did all of these other transactions because they can see it all on the blockchain, and they'll be able to trace everybody that I sent money to. And then once those people come in and out through an exchange, they'll be able to identify who they are. So individually, I can't look at the blockchain and know you have however many Bitcoin or somebody else, unless you tell me what your address is. But yeah, it's transparent, but it's not. But there's still a privacy element to it, right? If you could download the Bitcoin blockchain today, it's going to be hard for you to figure out what my address is. But if I tell you what it is, and I tell you I have 10 Bitcoin, you can go there and check that I do. You can make sure that I'm telling the truth because that is available for public consumption. It's an interesting level of privacy and verification that we've not seen before through the traditional banking system.
Yeah, that is a super interesting way of actually viewing this. And I'm already blown away with some of this techno talk actually behind it all. So you said something, it's about buying. You said Coinbase and you said Coin Wallet maybe. So I guess if someone wants to buy cryptocurrency, where do you get them? Like, is it an exchange or is it regulated? Like right now, if I want to buy Bell Canada shares, I go on the TSX and I exchange it with somebody else. But crypto, right. Not sure how to do.
Yeah, this is a great question and really goes to the way in which this crypto industry has been evolving over the past 4 or 5 years. So until recently, if you wanted to own Bitcoin, to pick on Bitcoin, you would have to go to a crypto exchange like Coinbase, go online and set up an account, which requires you doing strange things like emailing a photo of your passport to them and taking a picture with your selfie camera on your computer and stuff like that. Stuff that you normally wouldn't do for a website because of all the kind of reasons for like privacy concerns. People don't like sharing that information with a website they don't know. But you had to do that for them to onboard you, which is a very different experience than if you go to a bank. If you go to a bank and you get onboarded, with your investment advisor, you know where they are. You've met them. You know the address they work at. You've seen them. It's a totally different experience. In any case, you used to have to do that. Then you would have to wire money to that exchange from your bank, which again is daunting if you just found out about that exchange by Googling for a website to buy Bitcoin. And then you would have an account on that exchange, and then you could go and buy and sell Bitcoin on that exchange. And once you have Bitcoin or whatever it is, Ether, you can then send it on the blockchain to people and stuff like that. But it's very fraught with challenges for the average person. You would have to go through that onboarding, which means you need to make sure the exchange is legitimate. You need to own your private keys in something called a crypto wallet to make sure that you don't lose your Bitcoin, that those keys secure your address on the blockchain, which secures your Bitcoin. So you have to keep track of these very, very long numbers. And if you lose those numbers, you've lost your Bitcoin. There's so many stories of people who've had, oh, I bought a ton of Bitcoin, and then I threw out my computer, and then I lost the hard drive, and now I've lost, 100 Bitcoin, and now 100 Bitcoin is worth a lot of money and that kind of thing. So it's full of challenges. Luckily, these days, it's a lot easier to do because there are now ETFs. And so an investor can buy an ETF. Our ETF ticker is EBIT for Bitcoin, ETHR for Ether. They can just go to their investment advisor and say, hey, I'd like to get some exposure to Bitcoin. And then they can hold it in the same brokerage account where they hold shares of Apple or shares of, any company, Enbridge, or, you name it, any of their stocks and bonds, they can hold an ETF. Now that ETF, our ETF, we've gone through all of that process of making sure we have security of the Bitcoin. We're only working with regulated counterparties. Our custodian for Bitcoin is a company called Gemini Trust that's regulated by New York State. Our custodian for the fund in Canada is a company called Sidel Trust. We trade on the TSX. Our fund, ourselves, we're audited by E&Y. We're regulated by the Ontario Securities Commission. I think most people want to know when they're working with anybody with their financial investments that they're working with an organization that's regulated, with individuals who are properly credentialed and have the right licenses and registrations to be handling their money. That's why ETFs have been such a big deal. That's why now anybody can participate and do so with the help of their investment advisor who can guide them and give them ideas on how to use it, and then use these tools to rebalance. If you want to have 5% of your portfolio in Bitcoin and rebalance every month, it's as easy as just having 5% in any given stock nowadays, which is so much better than it used to be. Takes away all these problems and ultimately just lets more people participate. These ETFs, they hold Bitcoin. You're holding Bitcoin, but it's the same like a gold ETF. I've had gold ETFs I've used over the years. I've never owned a bar of gold myself. I would never do that. I'd then have to, hire a guard to stand outside of my house and, all kinds of things I don't want to do. So I just hold an ETF. And that's the great thing about ETFs. So participation's getting easier. A lot of those challenges are kind of melting away as the market becomes more regulated and these tools are available for investors.
Cool. You did mention one thing I thought was really interesting there, the whole security of knowing that it's going to be there in your account. I think that's really a very innovative way of purchasing cryptocurrency. It's been coming on and being very popular as of late. I don't know how many companies are doing that exact same thing, but it is growing. So that kind of leads me to my next question here. How many different cryptocurrencies are out there? We've talked about the two biggest, I believe, which is Bitcoin and Ether. But there's a ton, and people, Elon Musk and all of these very, very popular human beings have been talking a lot about them. So how many are out there, and are they all worth something to look at? And then are the fundamentals that we should be looking at within these currencies to figure out if it's worth purchasing?
Yeah,
it's a lot of questions.
No, that's a great question.
Sorry.
It goes to the heart of it, right? That's a very similar question to saying how many stocks are out there? How do I pick the stocks I should buy, right? There are literally thousands, tens of thousands, right? In terms of cryptocurrencies, there are several hundred. The total market cap of all the cryptocurrencies tracked by CoinMarketCap, which is one of the resources I use, is $2.25 trillion, okay? Of that $2.25 trillion, 42% is Bitcoin, 20% is Ether, and then the rest is all the rest. So you have a pretty significant overweight to the top two. The top two are very different from the rest because, I could create my own cryptocurrency today. I could create Elliot coin, and then there's no reason why anybody should want to have my cryptocurrency because I don't have any legitimacy in the market as a store of value. I don't have any reason why people should use my coin. I just made it up. So it's like how many web pages are online? There are lots of web pages online. How many web pages online claim to tell you the news? Lots of them, but there's only one Globe and Mail web page. There's only one New York Times web page. So people are pretty smart about figuring out which ones make sense and which ones you can ignore. And you really, so first step is don't assume that the latest crypto you've heard about is going to become the next Bitcoin, because that's like saying, well, I started a business yesterday and I'm going to be the next Microsoft. It's, you're better off owning shares in Microsoft than my business. The smaller, the newer, the more speculative, and so forth. There are other things, though, to bear in mind when you're looking at cryptocurrencies. I think a big one is their legitimacy in the traditional financial system. So to pick on Bitcoin and Ether, several things have happened that make them a completely different category than everything else. So to pick on two big ones, we've talked about ETFs being one of the big ones. These are regulated investment vehicles that have been approved to hold these cryptocurrencies. That's a big endorsement from the industry, because the regulators have done a very deep due diligence on these products. They would not approve Evolve to launch any old crypto. I'm not sure we could get a Dogecoin ETF approved, just to pick on Doge as one of the more famous ones recently. But the other thing that relates to that is the futures market. The Chicago Mercantile Exchange, the CME, has had Bitcoin futures now for about 4 years and Ether futures for about 3 months. They've settled about $350 billion US worth of futures contracts over that period of time against those two cryptocurrencies. That is really significant, because when you look at most investment assets, a thriving derivatives market is key to having a stable cash market for the asset, right? So just to pick a stock, right? Apple is a better stock because there are options on Apple, because it means people who are in the trading business can take risk positions in the options market, which allows investors who want to buy and sell Apple to get a stable, good price every time that relates to the real supply and demand for that in the market today. You need that to have a stable market. Having the futures out there trading on Bitcoin and Ether allows us, in our fund, for example, to buy and sell an unlimited amount of Bitcoin or Ether and always maintain the same amount of Bitcoin per unit for investors. So if you buy a unit of EBIT, if you spent $25 on that, you have $25 of Bitcoin, because it holds 100% of its assets in Bitcoin and always will. No matter how many more units of the fund are created or how many of those units of the fund are redeemed, because the futures market is there to provide price certainty to the spot market. I would say to anybody looking to say, well, what's the next big crypto? Look to the futures market. When you see the CME listing a crypto or announcing they're going to list, because they usually announce like 3 to 6 months before they actually list a contract, that is a sign that that cryptocurrency is now going to flip over and become mainstream, because now you have so much more liquidity attached to that, because you've got market makers who trade futures versus spot. You've got banks that can now start to trade those futures, which means now it's legitimized at the banks, right? The banks have been trading futures on crypto long before they have started to use crypto funds. And in a lot of cases, the banks are still not personally directly owning Bitcoin itself and owning those wallets and keys and everything else. So it steps in from that perspective. And so that's the way I look at the crypto market. I think it's a matter of looking for these signs of legitimacy. We've got two cryptos that are head and shoulders above the rest, which explains why they have, on any given day, 60 to 70% of the total market cap of the cryptocurrency sector is in those two. That's explained by the fact that they've really crossed the divide into being legitimate and used in all kinds of ways by all kinds of investors, professional, individual, institutional. People are participating in that market. And it's tremendously exciting, because this is a real change that's happened only recently in the industry.
Yeah, a lot of companies are embracing these cryptocurrencies. We heard about Tesla saying that they were going to accept cryptocurrencies for transactions. The news today says that wasn't going to happen. But are we going to see more of that, you think? Like these massive organizations saying, yes, we're going to use these currencies to sell you our products? You think
Yeah,
that's going to
so I believe
happen?
I think Tesla sold 17 cars before they stopped their Bitcoin. They sold 17 cars in Bitcoin or something like that before yesterday's tweet from Elon Musk. But Mark Cuban announced yesterday he's continuing to accept Bitcoin for tickets for the Dallas Mavericks. He owns the Dallas Mavericks. I think it's inevitable. The bottom line is we're entering a new financial era of digital finance, and as more and more adoption happens, and we're only on day one here, you're going to see banks and other financial institutions allowing investors and customers to use cryptocurrencies, just like you can hold, for example, just to pick an example, today you can have a Canadian dollar account and a US dollar account at your brokerage firm in Canada. No problem. Everybody can support that, right? So yeah. What about an account that's denominated in Bitcoin, where I fund it by sending Bitcoin to you, and then we make our investment strategy and it's denominated in Bitcoin? I think it's inevitable that we get to the stage where people are using these as just other currencies, other sources of value, other sources of unit of exchange. And as that gets built into the system, you're going to see more and more people using Bitcoin as a method of payment for selling things. And this is moving faster than I think most people realize. One sign of that is Square, which is the payments company that was started by Jack Dorsey, who's the CEO of Twitter. It's a pretty well-known fintech business. PayPal also, which by the way, founded by Elon Musk. So not like Elon Musk doesn't understand digital finance. He created the first internet finance company ever. He created PayPal. That's where he made his first fortune. But both of those companies are allowing their customers to use Bitcoin. So when you do that, now you can imagine, like if I started a shop, let's say I start a store in Toronto that sells, I don't know, t-shirts. I could say, well, I'll take Bitcoin as my, you can buy my t-shirts with Bitcoin, because I have a Square terminal for my point of sale, because I'm using Square as my, back end for my point of sale system. Very, very easy for me to do. And then you can have people show up and say, oh, okay, well, here's my phone. I'm going to pay with Bitcoin, or they'll just, transfer it to me when I sell it to them online, build it into my web store that I'll have showing all my t-shirts online. I go in and I go to checkout and I pay with that. You've got Facebook yesterday announcing that they're revisiting their cryptocurrency project, which is going to allow Facebook to have its own Facebook currency for transacting things on Facebook. So I think this is really opening up, and I really do believe we're not in a competition. It's not like for cryptocurrencies to be successful, the Canadian dollar has to stop being used. I think it's just a matter of now having other choices, and it's a sign that the world is becoming increasingly global. And if you think about it, I'm a Canadian. I live in Canada. I make my money in Canadian dollars. I shop all the time in other countries and have to pay US dollars if I'm online at some online store that is run out of the US.
They do.
That doesn't make any particular sense to me that I have to pay in US dollars. I don't know. I have no personal relationship with the US government. So wouldn't it make more sense if all online shopping was denominated in Bitcoin, and then it would be easier for me to price compare that same product from a store, in the US compared to a store in the UK, or a store in, some other country, right? So you could see a future where we have digital currency because our lives are online, and that's where we're spending our money. And so these things just sort of, they start to make sense as you think about them, and you're like, yeah, this does make sense. And yeah, the way we've been doing it up to now is just kind of because that's the way it was, rather than it was like a better way. And so people are starting to adjust. And I guess it's too bad if you wanted to buy a Tesla using Bitcoin, you can't do it anymore. But if you have Bitcoin and you want to buy a Tesla, you can still convert it to US dollars and buy your Tesla. So
yeah, I guess you could. Right? I do have a question for you. So let's just, because we're kind of wrapping up here. It's at the end of our 30 minutes. If anyone has any questions, please put it in the question box there. It's little conversation button. Just type them in and we can ask Elliot on the go here. But let's take the two biggest cryptocurrencies in the world available today. So you've got Bitcoin and you've got Ether. What is the difference? What's going to make me go buy versus one? Like, what is the difference fundamentally?
They are very different. So Bitcoin, we've talked a lot about it. It's digital gold. 21 million maximum supply of Bitcoin. There are 18.6 that have been created so far. It's going to take another 150 years to create the rest of them. You own a Bitcoin. You have a finite supply, digital gold. That's really it for Bitcoin. Ethereum is a whole other ballgame. Ethereum is a programmable blockchain. So when you use Ethereum, you can build apps on top of Ethereum. The best way to think about Ethereum, in my feeling, is it's like the World Wide Web in 1995, back when web pages were just starting to be a thing. You could take this thing called HTML and make a web page. You can build things on top of Ethereum, and there's an entire ecosystem called decentralized finance. Sometimes it goes by the name of DeFi, that's being built on top of the Ethereum blockchain. And billions of dollars of Ether, which is the cryptocurrency on top of the Ethereum blockchain program, is on deposit in these programs in decentralized finance. And so these programs are building things like exchanges to buy and sell digital currencies, something called NFTs, which was in the news recently, which is a way you can buy and sell the ownership of artwork using a digital token called a non-fungible token. Because it was a big deal. There was an artist called Beeple who sold a piece of artwork for about 60 million US dollars on the Ethereum blockchain. So this is real stuff that's being, put onto the Ethereum blockchain, and buying and selling ownership of these things. But the programs to be built on top of Ethereum, where it's kind of the sky's the limit in terms of what they can do. There are ways in which you can borrow assets on programs on the Ethereum blockchain. But the difference is these programs are autonomous programs. It's not a bank. Like if I have to borrow money from a bank, I have to make an appointment with the banker. I have to go in, I have to sign like 1,000 pieces of paper. It has to be during office hours. And then they maybe, do nothing for 2 weeks, and then they give me my money, and then I go do something. And you can do all of that just by tapping on your phone if you're doing so in cryptocurrencies on the Ethereum blockchain. That's the promise. It doesn't really change what's happening. I think you're still going to have lots of institutions using Ethereum, but they'll be doing what they do today in the regular world, but they'll be using the Ethereum blockchain. Just like today, you can still send a letter, but most of the time you're sending email. Email it hasn't stopped us from communicating. It's just made it faster and more efficient. And there are big Fortune 500 companies building on top of the Ethereum blockchain. Major banks, firms like Ernst & Young, Microsoft, Google, SAP, there are companies building on top of Ethereum. And what they're really doing is taking the existing financial system and reinventing it on top of internet money. That's going to make our world faster. It's going to make the friction between the people you want to work with much lower. It's going to make it easier for us to trade with people, to do business with people, to invest together, to buy and sell things from one another. And so the difference between Bitcoin and Ethereum is the building block for this revolution. And it is, I think, an order of magnitude more exciting than Bitcoin because of all the things that we can see that can happen on top of this technology layer called Ethereum. And so to me, they're both fascinating projects. I think if I boil it down as an investor, I buy Bitcoin in my portfolio because for the same reason I would buy gold. I'm worried about inflation. I want to store value. I buy Ether in my portfolio for the same reason I would invest in early stage tech startups or venture capital. That's the opportunity set for things built on top of Ether. And when we talk to big institutions who are buying these things, big institutional asset managers, they're looking at them in those two categories. So Bitcoin fits nicely in their gold bucket, and Ether fits nicely in their tech VC bucket. And these are the kinds of folks who routinely invest in Silicon Valley startups. So they look at Ether, they totally get it. And I think that's fabulously exciting because these are not the same. You shouldn't be like, well, do I buy Bitcoin or Ether? They're both cryptocurrencies. they're both cryptocurrencies in the same way that, General Motors and General Electric are both stocks, but they're not the same as each other. And so I think it is important for investors to realize the opportunity set here is very different. And the exciting thing about crypto is we're seeing more and more of these projects happening every day, and the future is being invented online. And now everybody can participate. So it's a really great time, exciting time to be investing here.
Yeah, no, it totally is an exciting time. It's definitely picked up a lot of steam since this whole pandemic happened. A lot of us are buying online, and everybody's talking about it now. I have one question that just came in, and I think it's important. Let's talk about the environmental aspects of cryptocurrency. So actually mining or sending money is actually using electricity. If we're already using a lot of electricity for what we have today, and this currency grows, like, are we going to really damage the environment?
Yeah, that's the topic of the day today, isn't it? And I think there are two important things to talk about here. The first is that a lot of the concerns around Bitcoin's environmental impact are vastly overblown, because in a lot of cases, the energy used to mine Bitcoin is starting from renewable resources. Look at a Canadian company like Hut 8, which is a Bitcoin miner. They have set up their mining in places where they've got access to renewable energy that they've funded the creation of. So it's actually a subsidy for the renewable energy industry, which is a wonderful thing. So Bitcoin is not as dirty as people say, even though it does consume a lot of electricity. But there is actually an even more exciting thing happening, and this is happening with Ethereum. Ethereum is undergoing an upgrade this year to Ethereum 2.0. And Ethereum 2.0 is going to change the way the Ethereum blockchain works from being what's called proof of work to proof of stake. And that means today, Ethereum, like Bitcoin, requires a whole bunch of machines to work on very, very hard math problems to run the blockchain, and that takes a lot of energy. And when you move to proof of stake, the math problems are way easier and consume almost no energy. You could run it on the kind of processing power you have, in a computer from 10 years ago. It's a very small amount of electricity required. But to be a miner on the Ethereum blockchain, proof of stake requires each of those miners to actually own some Ethereum that they stake as part of their participation. That's an important thing because it makes the Ethereum network dramatically more secure, orders of magnitude more secure than Bitcoin, because to attack it, you would have to buy as much Ethereum as the mining pool is using, which will be, billions of dollars worth of Ether. And secondly, the electricity required to run the blockchain drops to the point where, you could run it, off of the kind of processor you have in your watch. Like, it's going to be a very small amount of electricity. So more security, less electricity, and a huge amount of increased scalability on the Ethereum blockchain. I believe that most of the cryptocurrencies will eventually move to proof of stake because of these advantages, which means that this concern about the energy use is going to just cease to be an issue going forward. And this is such a new thing right now that transformation is going to take a little bit of time to happen. Yeah. But the environmental impact, I think, is not really an issue, and I think it's going to become something where, it will compare favorably to other things. I mean, back to the idea of digital gold. Not like gold is the cleanest thing to pull out of the ground. You have these mines that destroy the environment and all of this energy that goes into yanking it out and melting it down. I think it's going to be great to leave that behind. That was an interesting thing from history, but not something we need anymore. And as we move into the future, we're going to have a clean, real-time digital future that, I think people are going to look back and go, well, the world did go in the right direction. And so that's my feeling on it from an environmental perspective. I do think it's an important question to ask. I do think it's an important thing for people to continue to demand, because it's relevant for everybody these days. And yes. I think it's a great question because it goes, nobody wants to invest in something that's doing harm. And so I think it's really important to be thinking about that.
I think it's really important because a lot of people have been worried about the environment and how our world's evolving. I mean, especially with the growth. We had a pandemic. I mean, that's the environment responding to what we've done, right? So it's a very valid question. It's good to hear that these different companies and people out there are trying to make it better and more efficient. So I think that's a positive for the two currencies, at least. We're way over time here. So if anyone else has any questions about this, please ask me via email. If you have any questions to ask Elliot, you can ask him directly through me. But apart from that, I think we're going to sign off here. Thank you very much, Elliot. I really appreciate your time here today. I think we've all learned a lot. So thank you very much.
Thank you. It's been great to chat with you. Appreciate you inviting me on.
Cheers. Thank you, everyone. See you soon.